Today I'm going to do a video on asset disposal as an adjustment and the effect on financial statements. This video is suitable for both grade 11 and grade 12, as nothing changes from the one year to the next. In order to be able to manage this work properly, you need to be very systematic, and the method that I choose to use I refer to as the Sun method. Provided you work through this step by step, you really should not have a problem dealing with asset disposal as an adjustment. So we start off with S, which stands for sold, and there are 5 steps to deal with when you sell a fixed asset. The first step is to update depreciation, obviously if the asset had been sold during the financial year. Then you transfer the cost price, then you transfer accumulated depreciation, you then record the selling price, and then you calculate and record your profit or your loss on the disposals. Only once you finish all 5 steps must you move to the unsold asset. And this is quite a straightforward step because all you need to do for this is to depreciate it for the year. When you finish with U, you then move to N, which stands for the new asset. The first thing you need to do here is record the purchase, and then you need to depreciate it for X months, however many months you owned it from when you purchased it to the end of the financial year. Now the easiest way for me to explain this work to you is to work through a worked example, which is what I'm going to do now. Right, you're given a lot of information here, starting with vehicles costing 360,000 and accumulated depreciation on vehicles at the beginning of the year was 120,000. Those figures you're going to fill in at the start of the financial year, as well as also start your brackets off here. So the cost starts with 360,000 and accumulated depreciation starts with 120,000. We're now ready to work through the adjustment. So they tell you that a vehicle which had cost 96,000 was traded in on the 31st of December for 32,000, no entries have been made. And they tell you the accumulated depreciation at the start of the year, they tell you the new vehicle, and then they tell you vehicles are depreciated by 15% per annum on cost, and your year runs from March to February 2024. Right, the first thing according to the Sun method is to update your depreciation. So we're going to take the cost of the vehicle that we're selling, 96,000, we're going to multiply it by 15%, and if you count the number of months from the start of the year to the date of sale, that is 10, so you take 10 and you divide it by 12, and that gives you 12,000. Now depreciation needs to get recorded in the income statement to start with. So in my income statement, next to depreciation, and right in the letter S, this is the update. The double entry for that is accumulated depreciation, which is going to increase as well. Please remember that this depreciation for the year is the exact same as what is in your income statement. So don't forget to put the 12,000 for S under depreciation under your movement section of your fixed asset note. Right, step 2 is to transfer the cost price. So the cost price of the asset is going to get subtracted here because we no longer own that vehicle. Step 3 is to transfer accumulated depreciation. Now don't forget, when you're transferring accumulated depreciation, you must transfer both the opening balance on the asset being sold as well as that 12,000 Rand update. And obviously accumulated depreciation is going to decrease. Step 4 for asset disposal is to record the selling price. Now because we are trading this asset in, basically what it means is we are giving them an asset in part payment of what we are going to owe them for the new asset that we are purchasing. So that's going to come under your trade creditors, under your payables note. Now at the moment this looks a bit strange because we started the minus 32,000, which was the selling price. Once we record the purchase in a minute though, you will see what ends up happening. Alright, the last thing you need to do for asset disposal is to calculate your profit or your loss. Now, in order to do that, you need to firstly calculate your carrying value. So the carrying value is calculated by taking what it cost you, 96,000, minus what you depreciated it by, which gives you 44,000. And that then gets compared to the selling price of 32,000. So you've actually sold it for less than it was worth, so you make a loss. That loss on sale will get recorded in your income statement under your expenses. If you had a profit on sale, that would get recorded under other income. Now I just want to go back to this carrying value here. This carrying value we need when we are doing our movement section, because the one thing that we need to record is disposals at carrying value. So as soon as you work out that carrying value of what you're selling, I recommend you come straight to the fixed asset note and record it. Bear in mind it will be negative because the value of your assets is going down. If you can get this far, that's the difficult stuff done. Once you get to the rest of this, it's a lot simpler. So we're going to move on now to unsold. And the only thing I need to do here is depreciate the asset for the year. Now, if you've done the transactions in this order, this will give you your unsold. 360,000 minus the 96,000. So we take the 360,000, we subtract the cost price of the one I'm selling, and then I times by 15%. Gives you 39,600. The accounts that are affected there, depreciation will increase. Now you can fill in the letter U. The same goes in your fixed asset note for depreciation, and accumulated depreciation will increase as well. So there's your letter U. The last thing we need to worry about is the new asset that I've purchased. So I'm going to record the purchase first of all, and then I'm going to depreciate it for January and February. Alright, to record the purchase, that is an additional cost. So your cost price is going to increase here. Don't forget to add it to your cost price under your final cost at the end of the year. And then go back to your payables, and that's what we owe for the new vehicle. So can you see you owe them 240, but you gave them something worth 32,000. So that means overall you only owe them the difference. The last thing I need to do then is to depreciate the new vehicle. That was a 240,000 at 15%, but only for 2 months of the year, and that gives me 6,000. Once again, the first thing that changes is depreciation. Now we have our N, and we have spelled out son. What goes in your income statement comes in your fixed asset note for depreciation for the year. There you've spelled out son. And the last thing is accumulated depreciation must increase with the depreciation on the new vehicle. There we have spelled out son. All that then you need to do is to work out your answers to your cost price and your accumulated depreciation. Then you take cost price minus accumulated depreciation, which gives you carrying value over here. Now what's quite useful, in my opinion, is to check if you start at the top and work your way down, you also get to this 378,400. So in other words, the carrying value 240. This block here comes to 138,400 if you work out the answer for those three numbers. And then if you take 240,000 plus 138,400, that will give you 378,400. So that's just a way to check that you haven't left anything out, perhaps at the bottom here. And if you think about it, it should make sense to you, because this part here, the top part here, is what you had at the beginning of the year. The movement is what happened during the year. So if you add and subtract depending on what happened during the year, you must get to what you've got at the end of the year. Beginning of the year plus or minus movements must give you the end of the year. So as I said at the start, the most important thing here is to be systematic. Start with sold, then do unsold, and lastly do new. That's the hardest it can get. Sometimes you don't have to spell out some. So for example, you might sell your only asset, then you won't have a U here. You will only have an S for sold and an N for new. Other times you might sell and have unsold and you don't purchase, then you will only have an S and a U. But if you trade in, you are always going to have sold, unsold, new. Grade 12, this was just one of the other adjustments that I told you about in a previous video, and I'm still going to do other adjustments after this one. Grade 11, you need to know this obviously for tests that are coming up, I'm pretty sure fairly soon, as well as I will do a different video for you with the general journal and general ledger to show you that aspect of asset disposal as well. Okay, that's it for now, guys. Thanks.